Did you know that a whopping 60 or more % of millionaires have at least 3 streams of passive income? Whoa! That's right. The wealthy understand that true financial freedom comes from having your money work for you, not the other way around. There is nothing more attractive than a he/him or a she/her that can answer that early dating question of what do you do in your spare time? Well, like other wisdom seekers, I spend a lot of time researching and activating passive income streams. I mean, isn't that a real lady boner? And that's exactly what we're jumping on and into. The most attractive assets. The top 5 passive income sources, ranked from worst to best. Now, I know what you're thinking. Passive income sounds amazing, and I love big assets, don't we all? But where do I even start? Trust me, I get it. It can feel overwhelming, but that's why I'm here to break it down for you. In this video, we're going to explore 5 attractive passive income streams, ranking them based on their profitability, risk, and how easy they are to manage, all while giving you the least path of resistance along with the pros and cons. So let's get to swiping right, from the worst of the best to the best of the best. Make sure to stick around until the end, because I'm revealing the absolute best passive income asset that has the potential to completely transform your finances, the absolutely smoking hottest asset. Oh, and while you're at it, hit that like button and subscribe so you don't miss out on future videos about building wealth and crushing your financial goals, hopefully adding a little bit of humor along the way. And if you dare, I will add a little joke about each passive option, so beware. All right, let's kick things off with the big asset, real estate. Now, I know what you're thinking. Isn't real estate the thing most millionaires point to when asked how they got there? I own a few properties. And you're right, I do believe in the power of real estate, but it's important to be realistic about its pros and cons. When people talk about passive income and real estate, they're usually referring to rental properties. The idea is simple: you buy a property, rent it out, and collect monthly cash flow. Sounds pretty passive, right? Well, not so fast. First, there's the upfront investment. Unless you're swimming in cash, you're going to need a hefty down payment and a mortgage. Then there are the ongoing expenses: property taxes, insurance, maintenance, and don't even get me started on potentially bad tenants. You've got to find reliable tenants, deal with late rent payments, and handle repairs, which, trust me, can be a full-time job in itself. Even with competent property management, it still carries risk. Real estate markets can fluctuate, and there's always the possibility of your property losing value. Now, don't get me wrong, real estate can be a fantastic investment, but it's not exactly a walk in the park when it comes to passive income. It requires a significant amount of capital, time, and effort, especially in the beginning. If you're not careful, being a landlord can quickly turn into a nightmare. So, while owning direct rental real estate can be a great long-term investment, it's not the most passive income stream, especially if you're just starting out. If you don't have the sums of money, expertise, and are not an accredited investor, funds or ETFs can be a path. Less control, but less involvement. Fundrise, Realty Mogul, and Arrived are 3 options, as well as many others, including many mutual funds. Do your due diligence. There are definitely more hands-off ways to build wealth, which brings me to our next asset class. And the first dad joke is, what do you call a real estate investor that is always complaining about their tenants? A landlord. Next up, we have dividend stocks, which are a popular choice for those seeking a more passive way to generate income. Now, unlike real estate, you don't need a ton of cash to get started with dividend stocks. In a nutshell, when you buy dividend stocks, you're essentially buying a small piece of a company that pays out a portion of its profits to shareholders, typically on a quarterly basis. The beauty of dividend stocks is that you can benefit from the company's growth without having to lift a finger. As the company's profits increase, so too can the dividend payments, providing you with a steady stream of passive income. Plus, there's the potential for capital appreciation, meaning the value of your shares could increase over time. Now, it's important to note that not all dividend stocks are created equal. You'll want to do your research and choose companies with a solid track record of profitability and dividend payments. Look for companies with a history of increasing their dividends over time. as this indicates financial strength and a commitment to rewarding shareholders. And remember, diversification is key. Don't put all your eggs in one basket. Instead, spread your investments across different sectors and industries to minimize risk. Overall, dividend stocks can be a great way to generate passive income without the headaches of being a landlord and with very small sums of money. They offer a good balance of potential returns and risk, making them a solid choice for both beginner and experienced investors. There are so many ways to do dividend investing. Check out our other videos on topic as well as other creators. We wish you the best there, but hold on, we're just getting started. Why did the dividend learn to drive? To get to a higher yield curve. Let's move on to the next asset class and see how it stacks up. Peer-to-peer lending. Is it high risk, high reward? Now let's talk about peer-to-peer lending, or P2P lending for short. This innovative financial model has been gaining traction over the past few years. This one's a bit more unconventional, but it can potentially offer higher returns than traditional investments like dividend stocks. The allure of P2P lending lies in its promise of cutting-edge financial technology and the democratization of lending. In a nutshell, P2P lending platforms connect borrowers directly with investors, cutting out the middleman, the banks. This direct connection can lead to more personalized lending experiences and potentially better terms for both parties. As an investor, you can browse through loan requests and choose which ones you want to fund based on factors like the borrower's creditworthiness, the loan amount, and the interest rate. This level of control is appealing to many investors who want to be more hands-on with their investments. The idea is that you're essentially acting as the bank, lending money to individuals or businesses in exchange for interest payments. This can be a rewarding experience, knowing that you are directly helping someone achieve their financial goals. And because you're dealing directly with borrowers, the interest rates can be significantly higher than what you'd get from a traditional savings account, or even some dividend stocks. This potential for higher returns is what draws many investors to P2P lending. However, it's important to remember that higher returns often come with higher risks. The landscape of P2P lending is not without its challenges and uncertainties. If a borrower fails to repay their loan, you could lose some or all of your investment. This is why it's essential to conduct thorough research and due diligence before committing your funds. That's why it's crucial to diversify your investments across multiple loans to mitigate risk. Spreading your investments can help cushion the blow if one or more loans default. Another thing to consider is the liquidity of your investment. P2P loans are typically long-term commitments, and getting your money out before the loan term ends can be challenging. Unlike stocks, which you can typically sell quickly on the open market, P2P loans are not as easy to liquidate. This lack of liquidity can be a significant drawback for those who might need quick access to their funds. So, while P2P lending can be an attractive option for those seeking higher returns, it's essential to go in with your eyes wide open and understand the risks involved. Knowledge and preparation are your best allies in this venture. It's not a passive income stream for the faint of heart, and it requires careful due diligence and risk management. The rewards can be substantial, but so can the pitfalls. Proper, lending club and peer form are all options amongst others. As a bonus, there are also hard money lenders that offer flippers and investors financing. You can also look into P2P lending there. I lent money to a politician. They kept asking for more, promising Uncle Sam would pay me later. Now, for our next contestant, high-yield savings accounts. Let's face it, in the world of passive income, high-yield savings accounts are about as exciting as watching paint dry. They might not have the thrill of the stock market or the allure of real estate investments, but they have their own unique charm. But hey, sometimes boring is good, especially when it comes to protecting your hard-earned cash. In fact, the peace of mind that comes with knowing your money is safe can be priceless. High-yield savings accounts are about as low risk as it gets. They offer a stable and secure way to grow your savings without the volatility of other investment options. You deposit your money, The bank pays you interest, and your principal is protected by the FDIC up to $250,000 per depositor per insured bank. This means that even if the bank faces financial trouble, your money is still safe. It's as simple as that. No complicated terms, no hidden fees, just straightforward savings. Now, I know what you're thinking. The interest rates on savings accounts are practically non-existent these days. It's true, the returns might not be sky high, but there's more to consider. And you're right, they're not exactly going to make you rich overnight. However, they do offer a reliable way to earn a bit of extra income without taking on much risk. However, with interest rates on the rise, high-yield savings accounts can offer a decent return compared to traditional savings accounts, especially if you're just starting out or have a low-risk tolerance. They can be a great stepping stone in your financial journey. The best part is that high-yield savings accounts require absolutely zero effort on your part. You don't need to constantly monitor the market or worry about fluctuations. You just park your money and let it grow passively. It's a set-it-and-forget-it approach that can be very appealing for busy individuals. Plus, you have easy access to your funds whenever you need them, unlike some other investments that may have lock-up periods or penalties for early withdrawals. This liquidity can be crucial in times of emergency. So, while high-yield savings accounts may not be the most glamorous or lucrative passive income stream, they play a crucial role in any well-rounded financial plan. They act as a financial cushion, providing stability and security. They provide a safe and liquid place to store your emergency fund, short-term savings, or even a portion of your passive income earnings. This ensures that you have funds readily available when you need them most. Remember, it's all about finding the right balance between risk and reward. Diversifying your investments can help you achieve financial stability and growth. Everbank, Capital One, CIT, all have attractive high-yield savings. Check Bankrate for CDs as well. What do you call a vampire banker account? And the king of the passive castle, online businesses, the ultimate passive income stream. That's right. In the world of passive income, nothing beats the scalability and flexibility of an online business. It's a game changer in the financial world. Now, I know what you're thinking. Starting an online business sounds like a lot of work. It seems daunting, doesn't it? And you're right. It does require effort, especially in the beginning. Just like planting seeds in a garden, it takes time and care. But here's the thing, once you've laid the groundwork and established a system, an online business can generate significant passive income with minimal ongoing effort. Imagine sipping coffee by the beach while your business runs itself. The beauty of online businesses is that they have the potential to reach a global audience 24/7. Your market is not confined to your local area. Unlike a brick-and-mortar store that's limited by its physical location, an online business can generate income while you sleep, travel, or even just binge-watch your favorite Netflix show. It's like having a money-making machine that never stops. There are countless ways to make money online, from e-commerce stores and affiliate marketing to online courses and digital products. The possibilities are endless. The key is to identify your passions, skills and interests and find a way to monetize them online. Whether you love painting, teaching or creating content, there's a niche for you. One of the most attractive aspects of online businesses is their scalability. They can grow as big as you can imagine. Unlike a traditional job where your income is limited by the number of hours you can work, an online business can grow exponentially without requiring a proportional increase in your time commitment. Your earnings are not tied to your hours. Plus, online businesses offer unparalleled flexibility and freedom. You can work from a park, a beach, or even a mountaintop. You're your own boss, you set your own hours, and you can work from anywhere in the world with an internet connection. Sounds pretty good, right? Imagine the freedom to travel and work simultaneously. Now, I'm not going to sugarcoat it. Building a successful online business takes time, effort, and dedication. It's like running a marathon, not a sprint, but trust me, the rewards are well worth it. Reaching the peak of success is an exhilarating experience. An online business has the potential to generate life-changing passive income, providing you with the financial freedom to live life on your own terms. Imagine a life where you can spend more time with loved ones, travel the world, and pursue your passions without financial constraints. All you have to do is search on YouTube and you will see so many options: Amazon KDP, Shopify stores, YouTube itself, affiliate marketing. The possibilities are endless. And the last silly dad joke is, why did the e-com site go to therapy? It had cart abandonment issues. So, there you have it, the top 5 passive income assets ranked from worst to best, and some seriously lame jokes. So, which are you going to swipe right on first? Remember, the key to achieving financial freedom is to have your money work for you, not the other way around. Whether you're just starting out or you're already on your passive income journey, I encourage you to explore these different asset classes and find the ones that align with your financial goals, risk tolerance, and lifestyle. Remember, diversification is key. Don't put all your eggs in one basket. Now, I want to hear from you. Which passive income stream are you most excited about? Which was the most cringy joke? Let me know in the comments below. And if you're looking for more tips on building wealth and achieving financial freedom, be sure to check out my other videos. As far as the jokes, they are a work in progress. Until next time, keep crushing it.